Well, thank you very much. And we appreciate the busyness of everyone. Again, it's a little different time frame. We're juggling some class schedules and some other commitments. Next month we'll be back. I think our plans are to get back on our preferred 12 to 1 time slot. Number of things going on. Guy, if you'd like to, as we were talking before we started out here, would you like to speak about the tariff situations that'll affect trade and currencies, war, all of that? Then before we get into the specifics on the that balance sheets and prices.
Yes, thanks, Dan. This has sort of been the headline news for the last week or so since Supreme Court decision came out with a 6-3 decision, sort of knocking back the International Emergency Economic Powers Act tariffs, the IEEPA tariffs. And everybody's trying to figure out what the implications of that are. Although I'm not completely across it, just a bit of guidance on that, or sort of how I read the situation. It's put a little bit of uncertainty in the ag markets, not as much as you might think. If you think the tariff issues are going to go away post that Supreme Court decision, I'd suggest you're mistaken on that. And I'd sort of like to walk through that in a more general sense. There's sort of three types of tariffs that we need to understand. One is what I just mentioned, the IEEPA tariffs, which is the emergency powers tariffs to be implemented that were impacted. Other forms of tariffs have not been. And the current administration is pivoting quite quickly to implement their Plan B on that. So the Emergency Powers Act tariffs will go away. However, keep in mind inputs such as fertilizer and those products already had an exemption to that. There are also exemptions on imports of beef, tomatoes, and oranges and some other ag products. Also, USMCA goods and products under the USMCA agreement were also exempt on that. So what the administration is busy doing is they're looking at new new 122 tariff, Section 122 tariffs, as well as 301 tariffs. Now, the Section 122 tariffs, they can be put in place for 150 days by an executive order. They have a 150-day limit. The scope is pretty general and will impact all imports, and those tariffs can be implemented at a rate of up to 15%. And I think currently they're looking at that base 10% import tariff rate, which that's consistent with what had been done in the past. Now, after 150 days, those can be extended by Congress. So I think that was the immediate sort of action that the Trump administration has taken. Second to that, then, are your 301 section tariffs and penalties. These are implemented under conditions that foreign trade practices are deemed to be unfair, unreasonable, and discriminatory, particularly under current trade arrangements. It requires an investigation and a result from that. If implemented, those are in place for 4 years, unless extended by Congress. There's no statutory cap on the level of those tariffs. They can be set at any particular level. Current applications of 301, and look, those that are in place for 301 are not affected by the Supreme Court decisions. Specifically, applications and development, China fell under this since 2018, and a number of the tariffs applied against China are currently under the 301 sort of action. Um, the other countries, Brazil, in particularly in action of deforestation and ethanol production, as well as Nicaragua under labor and human rights issues, have current 301 sort of tariff arrangements into place, and those are not affected by the Supreme Court decisions. At the end of the day, it sort of adds a bit of uncertainty as sort of current price direction, particularly as we're looking at planting coming and looking at new crop prices, adds a bit of additional uncertainty. But I don't think there's as much uncertainty as what we maybe initially anticipated with that ruling. I'd suggest a lot of the current approaches under that the current administration has taken will pivot to either 211 or 301 type action. It just takes a bit more time to put those in place. And the 211 actions are only good for 150 days. Again, that buys a bit more time for them to put something in under 301. So a lot of these issues are being further investigated under the 301 action. So that's just a
And,
brief recap there, Dan.
and they're just, it sounds like these other types of tariffs are probably slower and more deliberative, perhaps maybe even handling involving Congress
Yes.
to institute them as opposed to the quicker application of the which the Supreme Court uh, voted against
Yeah.
of the IEEP tariff. So
Well, the way I read it,
interesting.
it doesn't need congressional approval to initially implement them.
Right.
Uh, 211s for 150 days, the 301 for 4 years. It does take congressional approval to extend them.
Extend them. Right.
So it's yeah, there's quite a bit of action that can be done by executive order. For instance,
Yeah.
the 211 immediate 150-day 10% tariff was put on the 24th, or put on, yeah, today, just
Yeah.
recently on implementing that.
So, all right. Was there something else, Guy, you were also going to mention with regard to energies?
Oh, yes, just
Areas?
the other geopolitical issue is the Iranian situation with the buildup of U.S. military presence in that Gulf region and anticipation of military action there. The Iranian government continues to crumble. Protests continue to escalate in earnest. Um, we're watching that very, very closely. What action might be taken is a bit uncertain, um, and that's been in the headline news. I sort of use the oil market as a proxy for that concern. Markets usually get these things pretty right. Crude oil prices are up about 66 $30 a barrel. It hasn't taken off to extreme levels. Uh, so I don't want to discount that situation, but it's nowhere near a crisis level. We still have oil prices below $80 where they were about 12 months ago or so. Um, so I'd like to think that's a signal that this will be worked through, and what actions is eventually taken, we'll wait and see. But they're definitely looking at regime change there in Iran. How that plays itself out, we'll wait and see. But if you go back to what was the 70s when the Shah fell, it's always a fairly bloody situation in those countries when they have a change of leadership.
And uh, it's not like it's not anticipated.
Yeah.
So
Well,
so a lot of
and
times in the
that
markets, it's what it's a surprise that's not already factored into the markets in some way that comes into play.
Yeah, well, it is factored. Yeah, I'd say it's factored into the market. A lot of uncertainty still there, and where that flows over into ag is in the ethanol markets for
Yep,
sure. It's been
energies.
a little firmer, and then also now in oil seeds, particularly in the biofuel and the oil seeds. Soybean oil has seen a pretty steady rally in prices, and it's been supporting that soy complex quite strongly all over the last few months. And that's bringing it back to the commodity side of things.
Well, thank you, Guy. What I would like to talk about would be uh, kind of a twofold deal. The first would be to look at where the markets are now, of course, but also at the USDA's projections now, kind of their coming out of their Ag Outlook conference on where markets will be this year. So we'll try to be brisk on that. Look at both the domestic side and also the international side. So here we go. There we go. The first, a little bit of a look at weather. It's um, We have pretty dry soil moisture conditions at present. Of course, it's prior to almost all planting, which means uh, the predicted soil moisture from through February the 1st is for most of the Corn Belt. It's great planting weather, but not necessarily a situation you want to see endure after planting, because if it would keep on off into March, April, May, June, then then you've got the attention of the market because of worrisome production prospects. But so this is out there right now. By note of the corn market, we're not seeing any weather rallies for crop production decisions in the United States yet. But this is something that we'll be watching going forward. And for the world, you can see there how the rest of the world generally views our dry conditions, where it falls on the map. You do have some varied conditions in South America. I did read reports, have seen reports that because of some wetness, uh, primarily that we're pretty slow on harvest of second crop soybeans, the planting of second crop corn in Brazil. Argentina's had some issues with regard to weather production problems. Again, not shaking up the markets in any major way yet. And here again on this NASA map, it just looks like pretty worrisome conditions in Europe, Black Sea region. There are other maps that don't show quite as much of a problem, but uh, if we have for any old crop corn. Again, have Ukraine as the fourth largest exporter of corn in the world. EU strong with regard to wheat exports as well as Ukraine, of course, Russia. So you have some dry conditions, and it merits watching. It hasn't sparked any major rallies yet. Major as in uh, over $1 or $2 per bushel is kind of how I quantify that. But anyway, something to watch. Some dry conditions in parts of South Africa, Southern Africa, and those areas. Um, uh, and Of course, you look to China, some wet areas, some dry areas, North China Plain, mixed conditions. And Guy, I wanted to ask you here. Sorry, I should have warned you about this question. So I hear reports that we're shifting from La Nina over to El Nino,
Yes.
at least a moderate one. And here we're looking at Australia. When you start to shift to El Nino in Australia, the world they start to get pretty worried, don't they?
Yes, it's an inverse relationship to what we see in the U.S. And generally, the relationship's probably most critical northern New South Wales and Queensland, more so than Western Australia or South Australia, Victoria. They just come off a fairly big crop. It's the middle of summer, so it's hot and dry there as it is. Not too worried about Australia. If I could just add a couple quick comments on the weather in the U.S., we are seeing a bit of a premium and concern start to evolve in the soft red wheat situation, given the dryness in the West. And probably the more immediate concern is the low water situation on the lower Mississippi and even extending up the Ohio and Illinois now a bit, but particularly the low Mississippi. It's had restricted drafts for some time, which is increasing the cost of freight to the export market. So keeping interior prices in the U.S. a bit discounted to world markets. It's also adding a premium in the cost of rail freight as they're moving more grain to export via rail, which is supporting Western grain belt movement of grain to export activity.
And we just do our windshield surveys of what we see out there in the fields or at the elevators. And I have seen some feed grain piles moved, particularly grain sorghum, even in far western Kansas. So it's worth watching.
Yes.
Corn markets, try to hit this again briskly. For corn, you can see this with this chart of March 26 corn that what stands out, I think if you can see my pointer, the January 10th report, the big drop, I think it was 21 some cents in March futures that happened at that time, went sideways and generally trend higher. And if anything, sideways to a little bit lower since then. No major changes. Had gotten up to about 4.30, again over $4.30 for a while. Closed well, actually this morning, overnight trade, etc., more like 427 and a half. So not a lot going on. I do watch several technical indicators. One that seems to summarize things nicely would be a relative strength in indices index that tells about the momentum in the market. So when you're generally drifting sideways to lower, you get something and if 50% is sideways, then you worry about 45, 46%. So generally moving just a bit to the low side. Uh, I just think anymore, it's good to keep in mind not just where we're at with regard to markets, but what the potential downside and upside can be in these markets. And just note, we don't hear of late over the last year or so, we've gotten as low as since mid 2024, 385 is a low. Last year, that would have been during January, February, March, April, May, June, July. That was in September. We had low of 392. We had lows prior to all the run up that occurred with the Ukraine-Russia war. Had gotten our lows were closer to say 309, 318, something like that. Highs now 518 and three quarters. The highs during this other time, previous time, without major upheaval in the markets, more like 4.5, 475. So at the end of what I'm talking about domestically, I'm going to talk about a grain marketing plan, new crop grain marketing plan, and what's kind of informing that is the potential that we've seen in a lot of these years for price run-ups. Again, quite often January, February, not much going on. Then we get out into spring, summer, and weather conditions. Issues overseas can move things around. So just here of late, we've had a 375 to 518. So that's about $1.35, $1.40 move that we've seen here of late. So that's we'll come back to that discussion.
Just just a couple comments in there, Dan, if I could. Even though we're coming off record global corn production and a very large feed grains crop overall, our corn's probably the one place I remain most optimistic, given its projected ending stocks to use. It's the tightest of when you compare it to wheat and soybeans. And I think if we do have a rally, it's going to be led by corn across the commodity complex, particularly with the situation potentially developing in oil and energy, should add some strength there as well as continue good numbers in the livestock sectors, particularly beef and even pork.
Yeah, there's still some carry in the market. Again, still a good number of folks that probably still have at least a portion of their crop, if not quite a bit of it, in storage. So you can see what the carries are coming out of the March futures, which again, it's March 1's just around the corner. We'll be in delivery. We'll roll over to May for considerations. But you can see it carries about 6 cents per bushel per month, estimated 12 cents total. From going out to the May contract, May to July, about 8 cents, a little less, and then pretty level heading off in September. Would note that you've got that we're finishing up the month of February, calculating crop insurance planning prices for corn and looking at these 26, what it's averaging for the closes in Feb, and about 464 is where it's at, where the we closed where we're at here. Just at this point, we're about 460, 465, something like that. So interesting to look at. I would talk about where the position of long and short managed money traders, specs. We kind of look to them as well. There are commercial traders, there are index traders, there are spec traders. So that on the spec side, we've got a little bit more bearish and than long. position in terms of short positions, about 1.5 billion bushels. You can see the scale over there, just a little over 1 billion long. This was measured as of a week ago, again, February the 17th. So, and with that, kind of sideways to so-so prices. I think folks like Guy and I watch those trader positions to see where it takes us. I think when you look at cash prices, again from this morning, March contract at the time we were looking at things, about $4.28. D's at 464 and a quarter. You come over and see where new crop bids are at, and still the strongest bid in the state. But it's a narrow base. There's about one or two major elevators in southeast Kansas that seemingly they have standout bids. Some uh, a lot of cases 30 plus cents higher than a lot of other elevators. But the highest bid in southeast Kansas, 418. That would be for current cash, new crop bid, 439. You come over to where our generally historically acknowledged demand center would be in Garden City. You have a lower cash price, a little over $4, matched by Topeka. It's in East Central Kansas at 403. The highest new crop bid, where they really want to incentivize corn plantings, would be in the Garden City area at 459. In Colby area at 430 and 439 also in Pittsburgh. So when we look at the new crop ratio of soybeans to corn, and if 2.3, 2.4 is about neutral, in terms when they look at futures, if you bring that same type of a view towards into Kansas new crop forward contract bids and look at soybeans versus corn, well, here you're favoring pretty strongly favoring soybeans in Topeka, Hutchinson, etc., and maybe a little in Salina, but pretty much neutral in Colby, somewhat neutral Pittsburgh, favoring corn for sure in the Garden City area. So, I guess it's not one uniform corn soybean price ratio. So much depends on where we're growing it and where we're using it. I did want to show you this in terms of for any old crop grains. These are cash prices here in Kansas for last full 24 full marketing years. As we said here in February, we generally would expect prices to go sideways for a bit and maybe come up higher into May. And then if we don't have a crop problem, move to the low side. I wanted to show you this. This is for 24 years. I think it's pretty important to look at what's been happening recently because these markets change, with the emergence, particularly of Brazil, coming in and affecting these markets as an export competitor. The highest seasonal time frame for us is again we're coming into that over the last 5 years. We get pretty high in April. Our highest average overall has been in May. If we don't, we peak over the edge. Does it look like a drought? Do we have crop problems? If not, we have been beginning a uh, fairly well-defined downward trend after we get through spring. So keep that in mind I'd say for both your old crop sales, but also for new crop pricing. There's a lot that happens in spring, and we can still get high prices in these time frames later in the summer, but it's not so much that well, I guess we haven't had that major drought, major 2012 drought, or other issues that have made us go to the high side. So when you come through a time frame without major droughts and come off, and also coming off the highs we had with Ukraine-Russia war, then later in the season we just tend to move to the low side. Just did want to show you just quickly. So, Guy, when we look at local basis levels, again, you and I look a lot at what elevators are doing. So it's kind of inside intelligence to see what local regional bids are. You look at the western third of the state, Goodland, Dodge City locations, really pretty level corn basis, weaker than it's been in for the last since 2023, including 2023. Here, zero would be corn cash prices equal to futures. But here in here this year in the Dodge City area, again, feedlots pretty nearby, some ethanol plants. now about 40 under, and level. You come into the central part of the state, uh, again about 50 or so under, a little stronger basis out in Southwest in particular. I guess sideways to slight strengthening. If there's any strengthening that we have seen, it's more in the Topeka area and also down in the Coffeyville area. So we've got kind of an east to west thing going on, pretty wide basis in the west, some beginning trends perhaps to narrow up in the east. So we'll see. Guy, any comments on that?
Um, no, I think these are basis value versus nearby futures. The thing
Yeah,
that we've seen is look good appreciation in basis since new gut slot harvest with the big crop on corn. I think a lot of the western demand and the feedlots are and the ethanol plants are fairly well covered. We're starting to see the board spread start to narrow in a bit. Uh, the other thing that's helping that is we've had record exports for corn again this year, and that very strong export program is lending support to that complex all the way across. As it the easy gut slot harvest grain's been got has been bought and secured and has been used up. So they're going to have to either reach a bit harder to loosen up some hedge stocks as we move forward, or see, particularly in the absence of any farmers selling.
yeah. Yeah, it's a good old annual standoff. Those that have it and those that want it. Uh, just quickly, coming out of that USDA Outlook conference, I think that probably the two big numbers that at least that I looked towards, the corn acres number came in at 94 million acres, down 4.4 from last year. The soybean acreage number by USDA was projected to be up by about that same amount. Of course, we'll have the farmers' opinions on this at the end of March coming up with a prospective plantings report. And then again, out there into the with the acreage report coming at the end of June. So you see this. There's a trading of corn and soybean acres in the heart of the Corn Belt going on. You can see the highest we ever had was last year, the 98.8. The corn yield, a lot of controversy over last year's yield. Still discussing that number in different quarters, but came in at 186.8.5 as their final yield. I think the first number in the January was it the December, yeah, January number came out at like 188. So came down some since that. If I think I've got that right. Projection this year, pardon me, at 183. But note, we're kind of, if you take this long-term view and in projecting yields that come into meetings, timeframes like this, you're looking at about a 2 bushel per acre per year increase. And where you have differences of opinion would be at that some folks will say, well, I see that trend, but we've been pretty level for a long time. A lot of that gain happened back here. So they would take this alternative view from about 2014 on, and this you're at about a bushel per acre per year, but a lot of pretty high endpoints that affect the trend. So the discussion this year, when we start watching weather, we'll be watching planting, but we'll really be watching the yield situation. Uh, and you come in again on this go around, you've got, instead of with these changes, lower acres, a little bit, still a record high, second highest yield in history if it holds, set of 17 billion bushels, more like 15.7, 15.8. And I'll show you a scenario later on. If we take these same corn acres, plug in, pardon me, some like 180 bushels an acre, which would be the third highest on record, but seems pretty low compared to where we're at right now. You know, you, uh, I think if we maintain this these great levels of usage, uh, and you get lower supply, then you've got some opportunity for prices to move. I've already tipped my hand here, guy. I've said basically that there's about a 45% chance that the USDA is right. So anyway, but I'll show you that in a minute. Corn use and stocks. You can see with USDA projected, probably the biggest number that was, there's two numbers on here that I really noticed. Instead of 3.3 billion bushels of corn exports, there's a projection of 3.1. So if that happens, still second highest uh, since back in 2020, 21. And this is for the marketing year that starts September 1. So that number will be really sensitive to the to whatever occurs in terms of crop size. And note, so Guy, you start to see some things here that catch your eye to be wary of. So with all of that, 183 bushels an acre, 4.8 million bushels less planted, assumptions about harvest to planted, you end up with a number, and this is the USDA's number of about 1.837 billion bushels of ending stocks, below 2 billion. And we've had some pretty good crop years, price wise, relatively speaking, at not too far from this number, this 1.8 billion, you're down to 1.3, 1.4, et cetera. So we're planning on the usage not being scaled back much. Uh, Corn exports, and Guy, you might comment on this because this ties in the international side. Uh, here's the pace up through the latest numbers we have. We'll update them on Thursday, latest through February to 12th. The pace of U.S. corn exports, we've separated from anywhere we've been and ever. Comment on that?
Yeah, look, this just highlights what I mentioned earlier, just the record pace. That's following last year. Again, we ended up with record exports last year as well, and that's what really keeps me optimistic. This corn price, if that continues, I think the ending stocks for the end of this year, 2026, are maybe a bit overstated by the USDA, and that sort of keeps me cautiously optimistic on the USDA number. The other things fundamentally supporting that is the strong increasing price of oil and the increasing ethanol margins, as well as the strong livestock sector. And that's just yeah, look, both of those. Um,
Yeah,
those
5.6
are two
billion
biggest
bushels of corn
complex.
used for ethanol. That's
Yeah.
so basically they went up to the previous record, which beat it by 5 million bushels.
Yes.
So anyway, yeah, just like you're saying, and feed usage not thought to drop off that much. So okay, let's keep going. Uh, who are we selling to? Uh, a bunch of people, but Mexico, 31% of our sales. That's a little bit higher than it had been. Japan, unknown sales, probably a fair amount of them. By the time they get designated on where they're going, et cetera, probably going to Mexico, a chunk of that, and a number of other players. You don't see any China in there, but you do see Spain, Taiwan, and Colombia. I've just read of a Colombia sale here in the last day or so. So some pretty brisk movement. Stocks to use overall, there's that. So we're up to 2.1 billion bushels last year projected, now to be down to 1.8, from almost 13% stocks to use down to 11.4. And then for prices, again, we're anticipating a little lower stocks prices. When you're unsure where things are going to go, but you think it's going to go up, you add a dime. Is that a fair statement, Guy? It's
Yeah.
they're unsure about that next market year, but if you do tighten up stocks, you're at least looking at some increase, and that's sort of a first cautious step out of the gate.
Yeah,
So,
I'd
and
actually be a bit more optimistic. I'd give it a quarter rather than just a dime on that, Dan. So
well, that's what our friends at the USDA have done. That's a World Ag Board, and you know,
just a, just
first do no
if I
harm.
could make a just a quick comment on that export mix. The country that was obviously missing there was China. USDA, I think, has their imports at about 8 million metric tons. Could be the unknown category. I think what's sort of weighing on that at the moment is not only Brazil but Ukraine, particularly their export pace has picked up momentum. They're expected to have a fairly strong
Yeah.
export program of about 9.8 million tons. And I think a lot of that trade out of the Black Sea is what's going to China. Keep in mind, though, China is the second largest producer of corn globally, and they're pretty close to self-sufficient. As their yield going up
Yeah.
even more rapidly than U.S. yield as they adopt some of this GMO technology. And I would suspect China is pretty close to being self-sufficient in corn in the next 2 to 3 years.
We have slides for these countries that have been mentioned. We've hidden them for the sake of time to get through the full presentation, but I think with what you've been sent, I believe you all have those. I just would say so. Here's if you ask me what I really think. Well, here's what I really think. Again, it's about a 45% chance, uh, some, you know, something along those lines that the USDA is right. Now those are the USDA projections. There's their 420 and there's their 1.8 billion bushels. And then uh, I think you have to say, well, if we do get moisture, we reached 186 and a half last year. That's a possibility. And my own weight on that, subjective, objective, I hope, about 1 in 5. That we get back to there again. That, and you could say maybe that's strong. Really, in my own thinking, I compared this and also the opportunity that, not the opportunity, but the possibility instead of 183 bushels an acre on these acres that we get back down to what would be the third highest on record. Previous had been 179.3 at 180 bushels per acre, which given where we've been, that would seem low. Total production 15.5 billion, total supplies 17 some. And if that happens, then guy, you're getting down into areas where the corn market starts to notice. Again, really, even with no rationing of usage on these major use categories, you're down to about 1.5, 1.6 billion bushels ending stocks, below 10% stocks to use. And you're just looking at historic price relationships, uh, relative to tightness of stocks, you're closer to $4.80. So if you're optimistic corn guy, there's your scenario. So
Yes. Look, I'd agree with that, Dan. You get below 10% on stocks to use in the US, that's a fairly sets up a pretty bullish sort of situation, particularly if there's any complication on that. And I think that sort of succinctly summarizes my cautious optimism on corn prices.
let's move quickly on a couple things here. So you've already talked that. I do want to um, a perspective on that could be used to approach putting together a corn marketing plan for this coming year would be to mix together both a kind of a scale up move. And here I've gone with futures up by a quarter each step. If you start with that right now, starting March 25th tomorrow, look at these futures. And if we get to $4.80 from where we're at right now for the futures, or a 450 cash price, and that would be probably forward contract. So you've got built in there, you're looking at a 30-cent basis. So you could either the futures could spur you to action and you'd hedge, or forward contracts could spur you to action if you're happy with the forward contract bid on that. And then to identify some time frames in which you'd act. So this is a marketing plan that's not waiting a long time to act. It's starting right now, and that's kind of consistent with what we've seen the last 5 years. Right now, you could act for some amount of. We just picked 60,000 bushels, or you could set that up in terms of crop insurance coverage, et cetera. But say you're looking at, for the sake of discussion, 10,000 bushel increments. You're looking at pricing in April, May, June, July, but you're getting pretty skittish out into July and August if we don't have crop problems. And really, the key word in this whole thing is or. So it's nice to have these goals, but if the market turns sideways to lower, we probably never get them. But the issue would be that if it turns sideways and starts to decline, it makes sense logically to still act, even though you're disappointed you didn't get 505 futures or 475 forward contract, to still act in April. Because what you're disappointed on now, if the market keeps declining, you'll look back and say, "Gosh, that was it wasn't what I was hoping for, but it's still a pretty good move in hindsight." So you're putting that together, and there's a question of, do you price at a loss? Looking at some K-State cost of production numbers, kind of a good general number for forward contract sales would be $4.50, with an idea you're covering. That's fully covering the cash costs, but also gives you something for machinery and whatever land costs you have and family living. So uh, so anyway, $4 as a 450 as a local cash price, i.e., if you don't act on anything, if you're not inclined to lock in a loss, or 480 futures. If the basis would widen out, you think you'll be able to beat that? You could look at that. So that cost of production goal, and we could have on our K-State website, we've got budgets developed, Greg Ivandahl and myself, to by region of the state to look at. Then this is being a pre-harvest plan. Then you exit all futures options position by October 1st. You're into harvest, and then you're switching gears your focus on to what the actual market conditions are at that time, and then looking towards post-harvest sales. Guy, um, I think actually for the long term for international corn, uh, I think you talked about most of it. I just wanted to point out this one chart. This is world corn supply demand, the February report, and actually we are at a 13-year low for corn stocks use. So your optimism is supported by a fact in the market projected by the USDA that I don't think we're paying much attention to.
Yeah. Yeah. And do you have the ending stocks list China there,
Yes.
Dan? Because
I
that's
yeah,
that even tells a more
th-
optimistic story there.
yeah, see in uh this chart, the chart you see here, in interest of time, I've got that one on there. It's hidden, but the world number keeps declining, but the world less China stocks uses a lot, 11% tighter. And it seems like we're just not very anxious to let world stocks outside of China fall below 100 million bushels.
That's right.
Or
We
11 or
get below
11%
that.
stocks to use. It's kind of a
That
floor we've set, actually.
yes, yeah, definitely.
Okay. So let's move on pretty quickly here. Uh, just want to, in the interest of time here, for sorghum, cash prices for sorghum we have seen in Hutchinson, uh, highest price, 373 cash, new crop bid 412. That's the leading area in the state. Pardon me, note that you've got to the west. Interesting to see the Colby bid at 390. That 380 in Salina, some weaker bids in the eastern part of the state. Of course, that we don't we don't grow as much sorghum in particularly northeast Kansas. So anyway, interesting to watch that. And that the timing for highs in the sorghum market the last 5 years have been different than for corn. We still have some relative strength in the spring, but January, February, last 5 years has been the last 5 years, it's been the highest average time frame for sorghum sales. So kind of contra seasonal. And you can see the sorghum export pace has been picking up some. Guy, there's the issue of the Chinese Lunar New Year. Is that correct? Would you want to mention that? Kind of slows
Yeah.
down their sales.
Well, starting last week, we're in the the Lunar New Year season. That runs till I think the new moon on the or the full moon on the 2nd of March on that. So business tends to slow down there. The other thing that's driving exports at the moment, there's some supply coming out of Australia and Argentina at the moment. That's usually finishes up by March sometime.
Oh.
And I would sort of expect if exports are going to pick up, I'd be looking at the March, April, May situation. But at the moment, hard to be optimistic on sorghum exports. We're pricing it in now at the moment into the domestic feed ration and ethanol markets. And unless that picks up, which I'm not too optimistic about, that's probably where we'll be the rest of the year.
Well, we'll see. You and I don't have to agree. I'll lay that on the table and we'll see. I'm more optimistic on that. But so that's a friendly bet. Well, I'll buy you a cup of coffee sometime if sorghum holds
All
up
right.
better. Okay. Quickly then for wheat, not a lot, hardly anything came out of that of the at least in my thinking, not a lot of change came out of the in the wheat market for the USDA Ag Outlook Conference. We have had some movement, some run ups in the wheat market, some fears of frost coming into play. And so we basically went from what was about 540 or so not too long ago, we gained about 40, 50 cents. Uh, uh, it I guess this would have been earlier this week, come back down close or end of last week, come back down and closed at 556. So thought provoking. Guy, I'll be interested to see as we roll over from the March to the May contract, what that does when we will we be selling out or whatever. I've got some information on that on those traders positions that might help us. Uh, and again, and for wheat, we're languishing more for wheat relative to historic lows than maybe with some other crops. You had low period through 15, 16, 17, 18, run up with the Ukraine-Russia war, came back down, recent low of 503, trading at about 569 on a monthly chart as a recent close by that measure. So had been as high as 746. It's wheat's just so interesting to me in that anytime I look at it, oh, it just looks, I wish it was a lot higher. But then when we do get volatility, man, the wheat market really moves. Uh, any thoughts on that?
Yeah, wheat's a pretty tough market. We've got record global production. There's a lot of wheat around. Ending stocks are very, very loose. It's just hard to get optimistic on wheat. USDA raised their wheat feeding last month internationally. Um, yeah, it's just a tough market with a lot of stocks around and no place to really go with it.
That weather chart that we looked at earlier with Europe and the Black Sea region potentially having potential to turn pretty dry. Uh, I would wonder if that's a factor that could be out there. But gosh, that's speculative to look at. Hope for a drought somewhere else for prices to go up. So uh, some carry in the wheat futures market. Again, we're looking at new crop July. Well, I believe is during May. I think we'll calculate the harvest time price for May or straddling months coming up. So right now, looking at about 597 for the July futures. We'll see where that goes. We still have some sizable carry. When you write these things down, you show numbers like that, and you go back and double check to make sure you typed them in right. But it looks like there's some fair carry in that market yet. I'm just not sure how many farmers still have wheat, although I think elevators will still carry wheat and perhaps be able to benefit from that. Just a quick look here at the managed money traders. Uh, this is for Kansas hard red winter wheat. Again, the specs yeah, had been trending a bit up in terms of their long positions. For their short positions, had dropped off quite a bit, even back up. So again, leaning a little more towards the bearish side, but not a lot of big moves right there. Cash prices, Hutchinson, uh, you were talking about cost of production for wheat. We have full economic cost production with land covered, generally at higher price levels than these cash price levels, guy. So we absolutely are covering the direct costs, seed, fertilizer, all of that. But we start trying to cover things you have to cover to keep an enterprise long-term sustainable, and to make money year after year, not just erode away. We're looking at 550 to 560. We do have some with good yields, some 550s showing up on the forward contracts. So interesting to look at there. Uh, the high prices, I guess the futures carry that we just looked at kind of fits in with historic prices statewide over the last 5 years. Actually, the last 15, we've tended to actually have seasonal highs. Well, right before wheat harvest, in May. So thought provoking. Did
Just
you
to
have a
comment
comment?
on your carries there, for Kansas hard red winter wheat, we're looking at 60%. The market's returning to 60% of full carry from now through till September, which that's just a strong incentive for these country elevators to carry wheat all the way through from old crop to new crop, which is quite in contrast to Chicago or Minneapolis. Again, just reflecting that large crop that's sitting out there, particularly in the Western grain belt. So
Yeah.
um, it's just a tough situation for hard red winter wheat.
Just quickly, USDA projected 45 million acres of wheat planted. They have a good idea already on hard red on the winter wheat acres. It'll be the spring wheat and durum that come in next, but uh, sideways to a little bit lower on the trend for acres. Yield about in line. They projected 50.8, about 51. And again, we've been higher than lower that of late, so not a lot of big change. We did have a we have had a pretty good year for hard red winter wheat exports, actually. So 320 million bushels, and uh, far exceeds the others. We've heard people talk about how the quantity of hard red winter wheat uh, probably should get more attention in futures trade. Uh, but there'll be another day when you and I talk about that. Uh, the pace of wheat. I guess the best cure for low prices is low prices. Overall, U.S. wheat exports really running towards the top where we've been. Hard red was running. These are in terms of number of weeks, millions of bushels. Were running almost equal to the highest pace ever not that long ago, but we're still running pretty good. We haven't fallen off a cliff, but we're not quite at the record pace that we'd seen in at least 2016 and 17. Shipping hard red to Mexico quite a bit, 25% of our sales, and then a host of other countries. And diversity is good. The 45% stocks to use, 5% projected price. So when you talk about the tough situation, if for every 100 bushels that you use, you have 45 of them sitting in a bin someplace. That lends to weakness in prices. In terms of where this market might go for wheat, so here's the USDA's projection, and say there's about a 50% chance of that. And then I just think uh, and finishing up this and looking towards the next marketing year, it's too early to argue with the acres or the yield. So you look at the exports, plus or minus 75 million bushels makes a lot of on U.S. exports makes a lot of difference. It's a range from 465 on more elastic on the downside to 580, more inelastic on the upside for price. So it's not a symmetric price response. But so I guess that's where we're at right now, and wondering if we can if people are aiming for higher prices, hoping for that, can we get stronger exports and tighten up stocks and get a little higher price?
Yeah, look, I just to tighten up those ending stocks, I just don't see the demand or the use coming in or exports, just given the global glut of wheat out there. Um, your analysis is
You'd have to
correct.
have a
I
crop
just don't
problem of
think we're
some
going to
kinds.
reach that low end.
Yeah. You'd have to have a crop production problem or something geopolitically to really upset the apple cart. So, um, and here's world numbers guy. Last year, this orange bar was a 12-year low in terms of stocks to use. Now, this shows as you look at your international sources, if they're kind of pessimistic, this is probably why. We were at 260 million bushels ending stocks last year, 280, 77, 78 this year, and we've just grown the projected supplies at the end of it all by more, and it takes some of the optimism out of the market.
Yeah, the story there I think is really told. If you look at that production number of 842 versus use of 824, well, that's 20 million metric tons of extra supply out there, and that just I think throws some water on my optimism for wheat.
Long term, over time, we've grown at a little over 2% a year, and we've our usage has grown less than that. So it's just a recipe for stocks. Uh, and yeah, and this upturn here in terms of even U.S. World minus China stocks, a lot of pessimism. Okay, we've got a few minutes. We want to give soybeans good coverage. One thing before I move on here, Guy, though, uh, you know, we we keep watching this world minus China stocks number, and the world has areas of stocks that through thick and thin, whatever, it doesn't like to get far below. And so again, lowest we'd seen 135, 135, 136, 132 last year. Now we've suddenly jumped back up into here. So if what's really guiding us on the world markets is what the stocks are outside of China, then we've taken a step towards higher stocks this year.
Yeah, the other key thing there on China is India. India announced last week they're going to issue some export permits for wheat. India is one of the big producers of global wheat. They can be an exporter or an importer, similar to China. Wheat and rice are a food security issue, but from time to time, when they do have an exportable surplus, India will export some, and that announcement last week, I think, is weighing on wheat a bit.
Well, and look at this chart guy, and that it's exactly what you say. You've got the European Union leading the way. The U.S. is in there, but we're about 6% of the world amount. The EU is higher. Some of that's probably internal. Uh, and China, India, Russia, in terms of producing countries, you look at that lineup, and then when Russia produces it, it's sending it. It needs cash. So top exporter, European Union following that. Outside its borders, Canada, Australia, the U.S., Ukraine back over here. And yeah, if India enters this, it'll be a new player in terms of the top exporters. Let's finish up with soybeans. So we're uh, you know, uh, it's when you keep looking at markets, you talk about a lot of things that are negative, and then you almost don't know how to deal with something that actually looks positive. So here you've got a run up in and I've got that's supposed to be 11. See, I'm conditioned that of habit. I put 1031 instead of 1131, but 1131 close for March soybeans in on well not a close, pardon me, it was trading overnight this morning. Look, the relative strength indice indicating a lot of positive here. You're closer to 65%, and note that corn was like 45%, so a lot more optimism run up like that in the market. Overall, we're sitting. We have lows. We had gotten to lows in the last 2 years about 947. We're $2 higher than that now. And that's for the close here. Yeah, here this month. So about 940, $11 47 cents. Uh, uh, Note we during this rougher time we got once to 1186 highs with wars and financial panics and droughts. Haven't gotten up to 16 $17. None of that being on site. It looks like there's a possibility moving higher, but without a drought or something extraordinary happening, you'd wonder if how much higher it could go. Some carry in the market. Note for crop insurance bids, looking at about 1115 is the close that we've had or the number this morning. It's about where the well, pardon me, need to stand back and have to take that into account with the average. If for most of the month we've been lower than that, then that number may be for the monthly average it closes could be somewhat lower. Guy, I wanted to bring this to you, take a look at you being in the trade in the past. So we saw uh, here for beans some real upside volatility on the spec side.
Yeah.
Not much movement, relatively speaking, going upwards. But when the U.S. and China came to an agreement on 12 million metric tons, you had that coming into play here of late. Another run up just in the last week or so to the high side, decline, a decline in the quantity of sell positions for spec traders. When you look at that profile, what do you see there in terms of
Well,
how trades
just
approach?
just looking at the far right of that, the long spec position, we've seen soybeans rally back up to prices that we haven't seen since pre-Thanksgiving. Pretty strong rally there, and what that tells me is it's the spec and the fund money that sort of come in there and led that rally as they're putting money in there. They're a bit more optimistic, that whole oil seed complex. probably a bit more optimistic than I am at the moment, but it's a good sign. Those we typically call that the smart money, and they don't get the flat price wrong too often. So it's good to see that support coming into the market just in the last 10 to 2 weeks. So
That high, uh, when the U.S. and China came to an agreement, that was the historic high, at least for any data that I have access to back to 2006.
yep.
So thought-provoking.
Hey, Dan,
Uh,
I'm going to break in. You'd asked me to give you a warning at 11 o'clock. It's 11:01.
okay, we'll be done by 11:10, Rich, for
Okay.
sure. Okay, so cash prices, um, 10, it looks like 1066 to 1086 is the top prices in the state. Out to the west, a little cheaper, of course. But new crop bids about 1050 on the high side. A couple of them, couple bids in those areas. Uh, a low out in western Kansas. Again, we talked about the corn soybean price ratio. In these same areas, right? If we have higher cash prices, of course, we have a higher a more favorable soybean corn price ratio for forward contracts for soybeans and for corn. So we'll see. The seasonal trends, again, 24-year average, tend to come into February, really tend to tighten up in March, not much happening, then have the potential for a lot of volatility out in April, May, June. Over the last 5 years, uh, we've our high has actually been uh, heading that way in March, April, but highest in May, starting to fade in June, and then if nothing comes about drought-wise, to really fall off in July and August. Soybean acres. So this is the other big news out of the Ag Outlook Conference. 81.2 million acres last year, 85 this year, 3.8 to the high side. So do that, and they plug in a yield equal to the record high they had last year of 53, which, as you can guess, I'm going to contend with that and say that's a possibility, but not sure. You end up with a production of 4.45 billion bushels, almost as high as we've ever had. Soybean exports on the low side. So, Guy, here I've talked all the positive things. Now I'm going to ask you to comment on the negative one for
Well,
soybeans.
appreciate you doing that at a grower webinar, Dan. Yeah,
Sure.
look, the export optimism for soybeans isn't. I can't. It's hard to get real bullish on that, and that's what sort of surprises me in this recent rally. Even look, we've been running behind. If you notice the slope of those curves, um, we our soybean export program for the season's always front loaded because come March, April, May, we're switching to South America, and we'll anticipate that switch in the next 4 weeks here. And it's just hard. It's hard to play catch up on soybean exports the last half of the year. So I think it's just going to be pretty tough. That's probably the biggest weight I see hanging over the my optimism on soybean prices.
Yeah, how I read one article by an analyst that said that the pace of exports we have on February the 1st probably isn't going to be the same pace we see on March 1st just because of the South American beets coming on.
Yep.
Uh, you want to comment on this? So we have business with China. This is millions of metric tons, 10.5, and you have unknown down here about 2.5. And if most of that's China, I think we're finding our 12 million metric tons.
Yeah, look, this is U.S. exports, and look, we're doing a good job of trying to diversify that market. Mexico, Egypt, particularly coming in there, has been good. The grower associations are doing a good job of promoting that in demand in other countries. If you sort of compare that to the global imports, China would be over 60% of total demand. But we're just they've got a preference for Brazilian soybeans and South American soybeans, and it just makes it a bit tough. Quite a contrast to the corn situation that we've seen
Yeah.
on exports.
And we continue to see the trend in response to that I guess vulnerability in U.S. soybean usage. We've trended more towards increased bioenergy usage and crush, and generally trended away from exports and are setting a situation stocks wise where we're as high as we've been since back in 2019-20. So that would keep a lid, unless something like that would change, that'd probably keep us from getting to 12, $13 soybeans or something.
Yeah. Just on that export, because we're crushing more soybeans domestically and using more oil domestically, what's increasingly important on that export trade is soybean meal. And while we've had surprisingly strong soybean meal exports, continuing to grow that demand for soybean meal is just really, really important to underpinning the price of soybeans at the farm gate.
Let's get down to the last little bit here. So stand back and look from a distance. That's U.S. soybean stocks to use. We're just level. We were bouncing around 8% or 8.1%, a little lower, a little higher, just kind of level. And the a little bit of an uptrend in ending stocks. So if you're level on your stocks to use and trending up on the stocks, that means you're growing your usage just a little bit. Prices USDA projected $10.30 for the new crop marketing year, had been trending up generally. I think my arrow is pointing up to it fits back there, but we're level here. And then this would be my contention with them. I think or not a contention, just an alternative opinion to see what could happen. This is what the USDA has projected in terms of acres, ending stocks, percent stocks to use, price. And generally, I'm thinking that if we end up with lower acres, because that's been our trend, we've come out early and said we're gonna have a bunch of soybean acres in coming out USDA Outlook Conference, and we've ended up lower for about 2 or 3 years in a row. By the time we got there, so lower acres and the lower acres and yields. If you end up with the 51 bushels an acre instead of the 53, you end up down here closer to instead of 8% stocks to use more like something under 6, or lower acres and just so yields, something like 4.5. So you end up with lower prices. So, Guy, I acknowledge your well-founded pessimism, and my arguments wouldn't be on the usage side; it'd be on the supply side. I wonder about this meeting with the USDA's projected
Yeah, I'd
supplies.
agree with that. I think they're a bit optimistic on planted acres on soybeans, but we'll sort of see that. U.S. farmers like to plant corn and grow it, and I think we'll see that few acres move back to corn.
Our favorite statement anymore is that farmers vote with their planters. So we'll see what happens.
Yes.
I think with that, I think 11:08. Rich, anything you'd like to say as we tighten this up, finish up?
Well, Dan, there was a question, and I didn't get it to you while you were talking about corn, but I sent it to you. It's on your chat there. You can read it, or I can read it to you. What would be your suggested marketing strategy for unpriced 2025 corn still in the bin? I don't need cash for spring bills, so could hold until summer. Corn is still in good condition.
I'll take first shot at that, Guy. If you want to follow up, I think seasonally we're still dealing with uncertainty about planting, and that's corn, right? So I think I would hold. I think the seasonal trends are are of from here on into May, April or May, would favor us at least holding steady, if not having something positive. If you held it that long, if you peer out there and it looks like things are dry, then you've got a different situation. Then it's a profit center. But if we just have so-so prospects, then you probably I would probably take the conservative route and so for the best local basis bid you can, and then move on. That'd be my thought, because the risk is out there if we don't have a crop problem in the spring, or and the market still holds on out into June, and we start to look good. We don't have any major problems. Then that long slow slide off into harvest can begin, and then you're just stuck.
Next question. If my growers had to decide corn or soybeans, what is the expert's choice? And I assume that's for planting this spring.
I think they should plant what they're good at. You know, they're most likely get the most. So that's a honestly, what's their comparative advantage? And if and their, of course, they have a cropping system issues that they're looking at, how much moisture they have, et cetera. Um, uh, so I and if they're sitting next to either somewhere near Cherryvale or Emporia, Kansas, where there's a crush plant, well, that probably influences their decisions, and or ethanol plants or livestock feeders. So which is better? Right now, just seeing in the eastern two-thirds of the state, the price ratios probably favor soybeans. But I tend to think, gosh, we're looking towards industry ties and opportunities, and if you can grow a crop there and have the ability to store it in some way, shape, or form, you can meet local demands in a timely manner. I think that plays to your advantage. What do you think of that guy from a uh, business point of view?
Well, I'd say, look, do your budgets. It's hard to get an objective pricing target if you don't know where your break even price is. Assess your local risk, particularly when it comes to weather and current water availability, and then go from there. I just and this is an Illinois perspective. I'm probably leaning a bit more towards corn than beans, but the thing with corn is you got a pretty high dollar outlay for production costs, and it's these production costs when you do your budget that's really killing the profitability in production row crop agriculture.
And you know, we tend to have more, well, we just have more units to spread our fixed costs out over for corn than we do for beans. You know, $60, 60 bushel beans is pretty good beans. 180, 200 bushel corn. We can take the same machinery line and spread the cost out more. Now, with that, I'm not speaking against the soybean industry at all, but uh, we're looking at we're really confident we're going to cover the uh, cash costs, you know, the direct costs. Uh, uh, but to have a quantity to cover the fixed is, I think, more and more of an issue financially in Kansas farms.